Hello everyone, this is Jeb Hamwerger from goldstocktrades.com. Today's Friday, June 8th, 2012, and I wanted to update my readers after the close on some important developments that have occurred over the past couple of weeks. Last Friday, we saw the jobs data come back very weak, and that raised speculation of a possible QE3. Earlier this week, a few Fed governors came out saying that more accommodative actions are needed. Investors were hoping that Bernanke, and during his testimony, would also hint at that, but they didn't. But he didn't. So what we saw is we saw a gap higher in gold and in silver, and in the miners, but that gap was filled after the Bernanke testimony, which is quite normal. Gaps are usually filled. So the jobs data came back very poor. We saw a gap higher, speculation of a QE3, and then a closure of those gaps. So we're gonna closely follow to see if these critical support levels in gold and silver in the GLD and SLV hold. For GLD, the 150 area is very crucial for it to hold, the bottom of this rectangular support. Here, the silver 2750 is a very important area to hold, and it's holding the 2011 lows. The miners we see is beginning to outperform bullion. It's holding above the 50-day moving average, while gold and silver have not yet been able to break through that. As a matter of fact, during the Bernanke testimony, the gold was right at the 50-day moving average and reversed lower and closed that gap. So we're going to closely follow and see if these support levels hold, and if this is in fact the end of the bottoming process for precious metals, which we really believe is going to occur. That gold and silver, we're going to see a rotation from some of the overbought dollar and the overbought treasuries into gold and silver and to the undervalued miners. If we take a look at the dollar reached a very overbought condition last week, and it hit this upper level resistance, and it came back to the 20-day moving average. It was up much higher today, but closed near the low of the day. The same way with treasuries. It was up intraday, but actually closed negative. So we're beginning to see an overbought condition, almost a parabolic rise over the past few weeks in treasuries and in the dollar. And this may be changing soon, as central bankers are on the verge of a possible QE3, as the growth is not moving higher. The unemployment rate is not moving lower during an election year, and we think the June 19th, June 20th meeting could be very important for precious metal investors. But we have to be cognizant of the fact that since the end of QE2 and the announcement of Operation Twist, we've seen a rally in U.S. equities. We've seen a rally in the dollar. We've seen a rally in the treasuries, and precious metals and the miners are in a consolidation mode. The same way with the euro. So now with this high dollar and these record low yields, this is going to be able to give the Fed more leeway to be able to value the dollar and to promote a risk-on rally into the equities, which have been suffering a recent correction. We think that may be occurring very shortly. China just decreased interest rates for the first time in 3 years this week. This indicates that they are turning the stimulative printing presses back on in China. This is going to help out the commodity sectors, the natural resources, and we think that next week and the next couple of weeks in June could be very stimulative for a risk-on rally and inflationary rally. So thank you and have a great weekend.